In this video, I am going to discuss about the complete treatment on the proposed dividend, interim dividend, preference dividend for the CBSE board examination 2026 onwards. Before I start the video, I would like to introduce myself. Myself is Rajesh Kumar Mahajan, authors, business study books for class 11th and 12th, objective type questions in business studies for class 12, accountancy books for MBT group. Now let's understand accounting treatment of the dividends. First, let's understand nature of dividend. Dividend is an appropriation of profit, which means it is declared and paid if profit that is current or past are available. Whereas interest on debenture, which is a part of the borrowing, is a charge against the profit, which is paid irrespective of profit. Now, kinds of dividend. There are basically three types of dividend. Number one, interim dividend. Number two, preference dividend. And number three, proposed dividend. Treatment for all these three dividends remains same. There is no difference in the treatment. Now let's understand the meaning of interim dividend. Interim dividend is declared and paid during the year in the anticipation of the good profit by the end of the year. Now, accounting treatment, it is added in the net profit before tax and extraordinary item as a non-operating expense and deducted from the financing activity as the payment of interim dividend. Now, let's come to the preference dividend. It is paid on the preference shares before the payment of the final dividend to the equity shareholders. It is paid as a fixed percentage on the opening balance of the preference share capital. Treatment, it is added in the net profit before tax and the extraordinary items as a non-operating expense and deducted from the financing activities as the payment of preference dividend. Now, last one, that is proposed dividend. It is also known as final dividend. It is recommended and declared by the board of directors after the financial statement have been adopted. That is the preparation of financial statement on 31st March of the accounting year. Treatment, dividend, proposed dividend previous year is added in the net profit before tax and extraordinary item, and the same amount is deducted under financing activity as a payment of proposed dividend. Now let's understand the rationale behind why we consider proposed dividend of previous year and not the current year. So current year proposed dividend is completely ignored when we prepare the cash flow statement. Now let's need to understand why previous year final dividend on equity share is considered at the time of preparation of cash flow statement. After the accounts have been prepared and adopted after March 31st in a particular accounting year, the board of directors set aside a certain part of profit for the future expansion purposes. And this retained profit is known as retained earning. And the remaining profit is recommended and declared by the board of directors as a equity dividend for the equity shareholders. As the dividend is declared, annual general meeting for the equity shareholders called in later stage, which normally takes place between 2 to 3 months or within 3 months from the date of preparation of final accounts. The equity shareholders may approve the same amount or even may reduce the amount of dividend as declared by the board of directors, keeping future growth prospects in the mind. And once the dividend is approved by the equity shareholders, it becomes the liability for the company. Now let's understand why it so happens with the help of one example. X Limited closing its books on March 31st, 2025. Dividend has been recommended by the board of directors on May 15, 2025. And the equity shareholders approved the recommended dividend in the annual general meeting on July 1, 2025. After the approval of the dividend, company paid the dividend on September 1, 2025. Here, the dividend paid on September 1, 2025 belongs to the financial year 24-25 but paid in the financial year 25-26, which means when the dividend is paid to the equity shareholders, it belongs to the previous financial year. Thus, dividend paid during the financial year 24-25 must belong to the previous financial year 23-24. So, while preparing cash flow statement for the year ended March 31st, 2025, we will consider the dividend for the previous year 23 and 24. I hope you must have understood. You can take the screenshot for better understanding. Why proposed dividend is not shown inside the balance sheet? As the final dividend is recommended by the board of directors after the preparation of the final accounts and which is subject to the approval from the equity shareholders, at that time it does not become the liability. So it cannot be shown or recorded as a liability in the balance sheet and hence it is considered as a contingent liability. Now, what is contingent liability? A liability which has not been acknowledged as debt at the time of preparation of balance sheet or final accounts, it is known as contingent liability. So as the proposed dividend is approved after preparation of balance sheet, that is why the dividend recommended by the board of directors becomes the contingent liability. And where the contingent liabilities are shown, the contingent liabilities are shown as notes to account to the balance sheet. Now let's understand the accounting treatment of proposed dividend with the help of three different examples. Here you can see the format of balance sheet, and below the balance sheet you can see the notes of accounts. You have current financial year 24-25 and the previous financial year 23-24. So on the basis of the information, we will consider the dividend, that is rupees 1 lakh, to be paid in the financial year 24-25. Rupees 1 lakh will be considered. So in the net profit before tax and extraordinary item, rupees 1 lakh will be added as a non-operating item or expense, and the same will be deducted under the financing activity as a payment of proposed dividend. So this way current year proposed dividend has been completely ignored. Now let's understand with the help of one more example. Here there is only difference with the amount of unclaimed dividend which is being shown for the current financial year 24-25. So this dividend must belong to the payment of dividend which must have been paid in the year 23 and 24. So unclaimed mean when the dividend for the year 23 and 24 was paid, some shareholders did not claim their dividend and it became the liability. And the liability appeared in the balance sheet for 24-25. So now what we will do, all information are same. Here the dividend for the previous financial year is 1 lakh will be considered, and out of this we will assume that rupees 30,000 has not been paid. It means 70,000 has been paid. So 1 lakh will be added in the net profit before tax and extraordinary item, and 1 lakh minus 30,000, that is 70,000, will be shown as a payment under financing activity. Now let's understand further with the help of one more example. Here unclaimed dividend is seen in the both the years, that rupees 20,000 in the year 23-24 and rupees 30,000 in the year 24-25. So now what we'll do, we will take rupees 1 lakh, and out of this 1 lakh rupees 30,000 has not been paid in the current financial year. So this means rupees 70,000 has been paid for the current financial year, and it will also be assumed the dividend lying unpaid during the previous financial year must have been paid in the current financial year. So rupees 1 lakh will be added in the net profit before tax and extraordinary item, as a non-operating expense. So there is no difference in the treatment to be added in net profit regarding the proposed dividend, but the payment for the payment would be reduced by 30,000 for the current unclaimed dividend and will be added rupees 20,000 as the unclaimed dividend in the previous year. So this way we will assume that rupees 90,000 has been paid during the current financial year 24-25 for the payment of proposed dividend. I hope you all must have understood the type of dividend, their treatment and their application. I hope you must have enjoyed this video. Thank you so much.